Warren Buffett. At 94, he's not just a billionaire investor. He's living proof that you don't need to be flashy to build a fortune. He built a trillion-dollar empire, yet still lives in the same modest house he bought in 1958. No private jets, no expensive watches. Just focus, discipline, and decades of wise choices. And now, as he steps down as CEO of Berkshire Hathaway, his timeless wisdom matters more than ever, especially for us in Singapore. Today, we're diving into Buffett's incredible life story, his simple but powerful philosophy, and 6 money lessons that can help you grow wealthy, slowly, steadily, and without stress. If you're serious about building real wealth, don't miss a second of this video. Hit that subscribe button to join us here at Wealth for You, give this video a thumbs up, and stay till the end, because the final lesson might just change how you see money forever. Let's dive in. Chapter 1. Who is Warren Buffett? Warren Buffett, also known as the Oracle of Omaha, started investing when he was just 11 years old and filed his first tax return at 13. That's right. While most kids were still figuring out their allowance, Buffett was already compounding his wealth. He didn't inherit billions. He built it. From buying small businesses to eventually transforming a struggling textile company, Berkshire Hathaway, into a $1.1 trillion investment powerhouse, Buffett became the 4th richest man in the world with a net worth of over $154 billion US. But what's truly inspiring? Despite his wealth, Buffett lives a modest life. He still lives in a regular home in Omaha, drives basic cars, and enjoys simple meals like burgers and Coke. Now imagine this: a man who could afford anything, but chooses not to. Why? Because to him, time, freedom, and purpose matter more than luxury. Chapter 2. Buffett's Philosophy. Frugal living and giving back. Buffett once said, "Do not save what is left after spending, but spend what is left after saving." That's the foundation of his lifestyle. He believes in living simply, investing wisely, and giving generously. In fact, Buffett has pledged to give away more than 99% of his wealth to philanthropy through the Giving Pledge, joining forces with Bill and Melinda Gates to inspire billionaires to donate to causes that matter. His life is proof that you don't need to show off your wealth to feel successful. And here's what's powerful for Singaporeans. Even if you're starting from a modest salary, you can follow Buffett's example by living within your means and consistently investing. Chapter 3. 6 timeless lessons for Singapore investors. Buffett's principles are simple. They don't require a finance degree or a high income. Just discipline, patience, and clarity. Let's break down 6 timeless lessons you can apply right now, whether you're saving for your first BTO flat, planning for your child's education, or working toward early retirement. 1. You don't have to be Warren Buffett to invest like Warren Buffett. Instead of trying to beat the market, Buffett suggests investing in what you understand. And for most people, that means low-cost index funds or dividend-paying stocks. Tip: start with the STI ETF or dividend-focused REIT ETFs like the Nikko AM Straits Trading Asia ex-Japan REIT ETF. Simple, reliable, and built for the long term. 2. Focus on avoiding big mistakes. Buffett famously said, "Rule number 1 is never lose money. Rule number 2, never forget rule number 1. His point? In investing, protecting your capital is more important than chasing high returns. A big loss sets you back far more than a big win pushes you forward. That means steering clear of get-rich-quick schemes, high-interest debt like credit cards, over-leveraging, or blindly jumping into hype-driven assets like meme stocks. Tip: always assess the downside before you commit. Don't FOMO into crypto coins, overseas property, or unregulated investments just because your friends or TikTok say it's the next big thing. Use tools like SGX stock screeners or speak with a financial advisor. In wealth building, defense wins championships. 3. Save first, spend what's left. One of Buffett's most powerful pieces of advice is simple. Do not save what is left after spending, but spend what is left after saving. This means you should always pay yourself first. Set aside a portion of your income for savings and investments before you start spending on anything else. Why? Because if you wait till the end of the month to save what's left, there's usually nothing left. Tip: make this process automatic. Set up a Giro transfer into your savings account or investment platform right after payday. Use tools like CPF top-ups, Supplementary Retirement Scheme or SRS, or monthly investment plans through platforms like DBS Invest Saver or FSM1. This discipline helps you build wealth quietly in the background while you focus on your daily life. Even $200 a month invested consistently can grow into a six-figure sum over time. Small steps, big future. 4. Patience pays more than speed. Warren Buffett didn't get rich overnight. He became a billionaire not in his 30s, but in his 50s and 60s, because he let compounding work over decades. He understood that the secret isn't speed, but staying in the game long enough to let your money multiply quietly behind the scenes. Tip: start early, even with just $100 a month. Set up an automatic investment into an ETF or a blue-chip REIT. It might feel small now, but over 10, 20, or 30 years, you'll be amazed at how powerful compounding becomes, especially with CPF and dividend reinvestment working for you. 5. Keep things simple. Buffett avoids what he doesn't understand. His investments, like Coca-Cola and Apple, are products he uses and believes in. You don't need 50 stocks or exotic strategies to succeed. In fact, simplicity often protects you from big mistakes. Tip: don't chase the latest trends. Instead, pick 2 to 3 reliable dividend-paying stocks, or broad market ETFs like the STI ETF or the Nikko AM Straits Trading Asia x Japan REIT ETF or CFA. Then, build your position steadily every month. Consistency beats complexity. 6. Value time over wealth. Buffett once said, "I can buy anything I want, but I can't buy time." That speaks volumes. True wealth isn't just about numbers in your bank account. It's about having the freedom to choose how you spend your time, who you spend it with, and what you give your energy to. Tip: use money as a tool to gain control over your time, not impress others. Whether it's leaving a toxic job, caring for your aging parents, or spending more time with your kids. Build your finances around your life, not the other way around. Final thoughts. Buffett's wisdom is for everyone. Whether you earn $2,000 or $20,000 a month in Singapore, Buffett's lessons apply to you. Live simply, save first, avoid big mistakes, invest in what you understand, be patient, and always value time over status. Buffett didn't grow rich by chasing trends. He did it by mastering the basics and sticking to them for decades. So don't worry if you're starting small. Even Buffett started by selling chewing gum door to door. What matters is that you start and stay consistent. Which of these Buffett principles do you plan to apply this year? Comment below. I'd love to hear your goals. If you found this inspiring, do give the video a like, subscribe to Wealth for You, and share this with someone who's just starting their wealth journey. Remember, becoming wealthy is not about luck. It's about living smart, starting now, and growing patiently. Thanks for watching. And until next time, stay wise and stay wealthy.